Hi, I'm Susan Lipp, Editor-in-Chief of Trust and Estates. I'm here today at Heckerling with Julia Chu, who is Director of Philanthropy at Credit Suisse. So Julia, what are some of the current trends in philanthropic planning that you're coming across?
Well, thank you, Susan. Well, as we've seen so far in the conference, income tax management is actually emerging as a core priority for estate planning, given the higher income tax rate environment on the federal level, certainly with the Medicare surtax, and in high state tax jurisdiction as well, like California and New York. So charitable planning is emerging as a very valuable vehicle for meeting one's philanthropic goals and doing so in a tax-efficient manner. We all know that donating highly appreciated marketable securities held for over a year can avoid any capital gains tax consequence upon sale if you donate them to a charity or a charitable vehicle, and will also yield an upfront charitable income tax deduction. And if you choose to retain an income stream for yourself, which you can do through a charitable remainder trust, contributing highly concentrated appreciated securities is a wonderful way to ease your way out of a highly concentrated position, diversify, and benefit charity as the remainder person on the back end as well. The thing to remember is that a charitable remainder trust, while it won't avoid the capital gains tax altogether, will stagger out the tax consequences over a number of years and then can make it a lot more palatable. So we do view charitable planning as resurging to the top as a means for estate planners to really navigate through this landscape. And another aspect is that charitable donations are not limited, of course, to marketable securities, but to complex assets. So if there are units of real property or closely held business that is also coming towards sale, as long as the deal is not consummated and there's significant negotiation time, you can very much do the same thing in diverting some of those units or shares ahead of the sale to charity and averting the corresponding tax, which is something that not enough business owners or real estate investors are aware of, and perhaps until it's too late.
Well, thank you so much for stopping by, and you could read more about charitable giving trends and more of Julia's articles by going to trustandestates.com.